You probably think Bitcoin makes no sense. Magic internet money for gamblers. Here is the uncomfortable part. Bitcoin seems absurd because you think you know how your own money works. And you don't. So today, no Bitcoin. Not one more word about it. Today, we open your bank account. And stay for the thought experiment in the middle. It might reveal you owe $500,000 you don't know about. Welcome to Market Raccoon, your financial learning channel. Today, what your money actually is. Open your banking app. There's a number, and you would swear that's your money, sitting somewhere in a vault with your name on it, waiting for you. That number is not money you have. It is money the bank owes you. Those are very different things. The moment your salary lands, it legally stops being yours. You lend it to the bank. A deposit is an IOU. The bank's promise to give you equivalent money back when you ask. You are not a customer with a locker. You are a creditor with a claim. And the bank does not keep it. It lends your money out. Someone's mortgage, someone's business, someone's car. How much must it keep on hand, just in case? In the United States, since 2020, the required reserve is a nice round number, 0. This trick is older than banks themselves. Medieval goldsmiths stored people's gold and handed out paper receipts. Then they noticed something. Nobody ever collected all the gold at once. So they started lending receipts for gold that was already promised to someone else. The receipts outnumbered the gold. Banking was born, and it was born fractional. This is fractional reserve banking, and it is not a scandal. It is the design. Your dollar exists in two places at once, in your app and inside someone else's house. And the system works beautifully, as long as we don't all knock on the door on the same day. And here's the part that should really bend your brain. When a bank lends your money, it does not move your money. It creates new money. The borrower gets a fresh deposit, your balance stays untouched. Remember the melting ruler, the money pool growing 25 times? This is the faucet. Most new money is not printed. It is loaned into existence. And if we all do knock on the same day, that's a bank run. Here's the thing, the bank isn't lying to you. Your money genuinely is not there. It is spread across 10,000 mortgages that cannot be unwound by Friday. If bank runs sound like black and white photos and panic crowds, update the picture. Silicon Valley Bank, 2023, $42 billion asked to leave in a single day through smartphone apps between meetings. A bank run is now a push notification and a thumb. The queue moved online, and it moves in hours. Quick quiz, and actually try this one. Your bank fails tomorrow. The app says $50,000. What do you actually own? Pause right now and drop your honest answer in the comments before I say it, because most people get this exact question wrong. Not $50,000. You own a claim in a bankruptcy queue, and you are not first in line. Now, the thought experiment I promised you. Say you owe the bank $700,000, your mortgage, and you keep $700,000 in an offset account at the same bank. Net position, 0. Perfectly safe, right? The bank fails. Ugly surprise. Your deposit and your debt are two separate contracts. Your mortgage is an asset, and the receiver sells it to another lender at full value. You still owe every cent. Your deposit? A claim on a corpse. Run the arithmetic. You still owe $700,000. Deposit insurance hands you back $100,000. The liquidation pays you scraps years later. You went to bed worth 0 and woke up owing more than $500,000. Maybe. Quick honesty note before we go on. In many places, netting rules or your contract's fine print may cancel the deposit against the debt when a bank fails. The point of the stress test is not that you will owe $600,000. It is that you do not know, and you never thought to ask. Maybe, because this is not fantasy. March 2013. Cyprus. The banks are in trouble. Europe writes a €10 billion rescue. And the condition attached, depositors help pay for it. At the biggest bank, everyone above the €100,000 guarantee lost 47.5% of the excess, converted into shares of the wreck. At the second biggest, deposits above the guarantee were essentially wiped out. It even got a polite name, a bail-in. Now the honest turn, because your money is not doomed. Deposit insurance is real, and in Cyprus it held. Nobody under 100,000 euros lost a single cent. To be fair, this IOU machine is also why mortgages exist, why businesses get funded, and why your card works in a foreign city at 3 in the morning. The IOU is not a scam. It is a trade. You give up ownership, you receive convenience and credit. A reasonable trade that almost nobody knows they made. And the safety net has a number: $250,000 in the US. In New Zealand, $100,000 per bank, and only since July 2025. Below the cap, you are genuinely protected. Above it, you are an unsecured lender. Know which one you are. But read the fine print like an investor for a second. Why would a vault need insurance? You do not insure things that cannot be lost. The cap is the system quietly telling you what a deposit really is, a loan, with a government backstop for the small lenders. Because once you see it, it is IOUs all the way down. Your broker holds your shares and street name. Your gold ETF is a claim on a warehouse receipt. Even the cash in your hand is, technically, a central bank liability. Modern wealth is a tower of promises. Mostly kept, but promises. And when the tower wobbles, watch what actually saves it. 2008. The promises started failing, and the fix was not making the promises good. It was a bigger promise, from governments, printed on top. The system did not survive because IOUs cannot break. It survived because someone taller kept promising. Remember that sentence for next episode. So here is the question the whole system hoped you never ask. What do you own with no one else's promise attached? Your house, minus the bank's share. Physical gold, in your actual drawer. And honestly, the list runs out fast. Everything else has a counterparty. Your portable rule, the ownership test. For everything you think you have, ask one question. If the institution standing between me and this asset vanished tonight, do I still have it? If the answer is no, you do not own it. You are owed it. Practical takeaways: no panic required. Keep accounts under your country's insured cap. Split across banks if you are above it. Learn your number. Owed money with insurance is perfectly fine for daily life. Just stop calling it ownership. Which leaves one question hanging. In a world made of IOUs, is there anything left that you can fully own, that nobody can freeze, and that you can still send across the planet in minutes? The answer is the most misunderstood asset on Earth. That's next episode. If your banking app looks a little different tonight, subscribe and ring the bell. The raccoon reads the fine print.